Do you see that role existing? Maybe perhaps 5 years from now, or 10 years from now, or 20 years from now, or will it be redundant?
And it's more about planning ahead, since most of the functions are being automated or being outsourced. So the reality is that you'll as the CFO, you'll have to be playing over and above those automated functions to take the business forward. So I've seen that transition from the manual times of where books used to be done manually, and then we moved into the bulky ERP systems. Then again it evolved into business intelligence. Now we have artificial intelligence. So there has to be that adaptability for the CFOs, and to have that capacity to look into the future to assist in the strategy development and driving the business forward.
Thank you very much. I hear the role is going to be official officer. CPA Dr. Rachel Gitonga. Do you agree with the CPA Mohammed that that role is going to change to become future officer, or give it another title? Or from your perspective, what do you see?
I totally agree. It's going to be a role that is extremely futuristic. As CPA Mohammed was answering, I was reflecting back on even my own personal journey when I joined the finance accounting field, what the environment was like. And the reason why it is going to be an adaptable role is because we are in an economic environment that is extremely volatile. And we know that as finance professionals. And there is no way, therefore, the function is not going to be forced to adapt to that. We are talking about what is happening in the tech world. We're talking about responding to pandemics that we've never seen before and the impact of businesses. We're responding to ESG, critical discussions that we are having. We're responding to political landscapes where our businesses are set up. How do we respond as businesses? We are in the same society, and you cannot separate the two. We are going to have to see more regulations coming through, responding to that. I'm in the insurance industry and reinsurance specifically. And the finance professionals in the room who are in the insurance industry know that, the topmost matter on everyone's mind now has been IFRS 17. That is one of the standards that has had to respond to the investor today. The investor yesterday, the owners of the businesses, the providers of capital today demand more because their businesses and their needs are changing. So for sure, it's going to be a role that is futuristic and very exciting for us in the room. I say so. Very, very challenging, but it's going to be very exciting. And it's going to be exciting because people are going to look upon us to add value. So for me, my other way of looking at this role is Chief Value Officer. And we've seen that actually in a lot of roles that are going out. They're saying, we are looking out for a Chief Finance and Value Officer. And the key is value. Yeah.
She has added another title to this position of CFO, Chief Value Officer. And she's from the insurance industry. I would like to turn to CPA Humphrey. CPA Humphrey, you are in the education sector. You are the CFO of KEMO, Kenya Methodist University. Are you seeing the similar thing in the education sector, or is a different landscape?
I agree with the panelists here on the changing roles that is going to happen in the CFO office. I'm speaking from an experience in the education sector. Probably chair and say that I'm a PhD student in finance, and one of the things that I'm looking at in my thesis is how universities are going to invest and are supposed to invest in technology-enhanced platforms to be able to enhance more students in online platforms across the world. Apparently, the largest university in the world, which has over 40,000 students, offers online mode of study, meaning the kind of investment that university has offered is at a high level. So the question is, are the CFOs, even in the education sector, going to look at it and say, how are we going to advise them bonds to be able to invest in high level areas that will capture online learning, having enablement in equipment and academic infrastructure. The issue here is this CFO that is in a modern age must be looking forward and asking himself, how sustainable is the business going to be, and advise the board accordingly. In terms of technology, the current CFO cannot run away from it, in the sense that he must be on the lookout. For example, if you're talking about digital, cloud computing, and we are used to modern servers which were physical. How is the CFO going to advise on the budgetary provisions that are going to enable organization to have cloud platforms that will enhance efficiency and reduce the risk? The other thing I tend to look at as a CFO going forward is this. Environments differ in terms of risks, and a current CFO must be able to look and say how are we exposed in terms of risk, and continuously advise management and the board on what are the risk factors that are exposed to the institution that will hinder the sustainability of this institution. And the more we continue in this business environments, we realize that the exposure to risk are very high. So in terms of risk exposure and information, the CFO must be on top of things. I'm looking at a CFO who is living in an environment which is highly vibrant and dynamic in technology. There's no way such a CFO will get remain ideally less technical survey when the environment and the world is going technology way. Of course, the extent to which the uptake will be done depends also on organizations. Some will have greater investment in technology than others, and at the end of the day, the CFO must ask himself or herself, are the needs of this organization being met given the technological advancements in currently available, and also the resources that they have as an organization. And I'm looking at it in terms of how heavy are you going to invest in the technology depending on your budgets, for example. So it will make the CFO be on the lookout on available resources, and also be on the lookout on available technologies and map them to the budgets available. In terms of the CFO being redundant because of technology, I don't think it is true that CFOs will become redundant, because one of the roles of the CFOs is strategic development and advisory role in bonds. In other words, you'll be part of the team that will be transitioning organizations from level of technology they are in today to where they want to go to the future. So he must embrace it himself, and also balancing budgets of the organization so that the uptake of technology is realistic in terms of what the organization can take. So they will be there as major stakeholders, because if you look at literature, from 2000 is when CFOs started entering bondroom to advise to be members of bonds. So they will be part of the team that will be building up a new initiative in organizations to transit enterprises and organizations into technology enhanced environment.
Like if you're in the 80s, if you remember, 90s, I hardly used to hear the role CFO. It used to be chief accountant. So when you'd hear someone was a chief accountant, that was a very big role. But nowadays you hardly hear of a chief accountant, because the role evolved from chief accountancy to a financial controller, and now maybe a CFO. So even if it might not necessarily be a redundant role, but there are a lot of things in terms of policies that we might have to start looking into the future, because in terms of adaptation and how these functions are being automated and taken over by the systems, by technology.
Mohammed, having been a CFO and now transitioned to the other world of consulting and providing, so where do you see the role of a CFO, or rather, how is sustainability discourse affecting the role of the CFO, both now and in the future? Are we seeing CFOs being unable to support the growth of their businesses, as advisors are said, as alluded to by CPA Dr. Resho, because they are not able to provide sustainability evidence of being sustainable businesses? And where do we see the role? Where do you see the CFO? Is it going to be the role of the CFO to to be the champion of sustainability in organizations, and in terms of help them to be able to access the finances? And are you seeing them transiting to that role, or remaining again dormant in the traditional role?
It will impact on the CFO, and it will be an interesting impact, because now in your financial report, you'll have to, whatever you do the reporting, you'll have now to account for the sustainability function, which I believe will be an interesting factor or an interesting function for the CFO role into the future. Now, whether it will continue being under the CFO, these are the beginnings of these sustainability standards which are coming up, and I know they'll keep evolving. It's just like audit and risk, because for instance, I know we sometimes you also mentioned that there are aspects of risk that the CFO has to look at, but then again, depending on the organization, those functions are independent. For example, risk and audit, they're not really under the CFO. So based on maybe the size of the business, or it might be maybe a separate function reporting to the CFO, or it might just be a totally different functions from operations, but having to be incorporated in the financial statements on how that is being accounted for. I would love to do that, because it's to account for that sustainability, and it's going to really be interesting looking into it.
CPA Humphrey, you're in the education sector. You are the sharers of knowledge, and you are the one forming the future CFOs, including even forming the future CFOs through training and research and development. Where do you see, how do you see sustainability affecting the role of the CFO in the future, now and in the future? Looking at what is happening, the discourse now is we have to be a sustainable business or institution or firm to be able to access the finances and even to grow our business. Is there value in adopting the sustainability? And do you see a CFO becoming a sustainability champion, or a person who will be more reactive than being a champion?
Thank you. First of all, the position of the CFO, from my experience, is that that position holds a lot of influence in the budget process making of any institution. And I remember in the morning when we were having the groups, you could hear the groups mentioning costs as a big impediment in implementing the requirements for sustainability reporting. And what comes in my mind is the CFO influence in the board at the level of approving the budgets. The CFO is capable of giving the board a clear financial position and do clear forecasting of the costs and budget implication of implementing the sustainability reporting requirement, and convince the board that it is worthy of implementation. And remember, at the point of budgetary allocation is where the argument will be, was it provided for in the budget? Was it approved by the board? Did the CFO present it as a requirement in this financial year for expenditure and so on? So I think the first thing is, once the cost is determined for financial sustainability reporting, I think the CFO role, the biggest role there is to convince the board that it is worthy, if the budget allows, to do approbation in the budget of that financial year, and the board will approve, meaning the implementation phase will be smoother. Thank you.
So it is clear, very clear, that CFOs play a pivotal role, a key pivotal role in enabling sustainability. And speaking to one person who is already practicing in the insurance industry, and the insurance industry is an early adopter of sustainability, would like to hear your perspective on how sustainability discourse is impacting on the role of the CFO.
Thanks. Thank you so much. Just allow me to revert back to a comment you made earlier as we were starting this about investors, fundraising, and capital. Just for a minute, because I think it's a very critical point you make about all of us here in the room, how we get capital, and how that is how the investors look at businesses and what they are demanding. We seem to have, like you said, very limited capital, and investors who are very savvy on the sustainability of the business, both financially sustainable but also environmental. I mean, and that's where the ESG pillars also support so much sustainability in the business. And what we've found from experience is you sit around the table and the money is on the table. But the key questions that they get to ask is, what exactly are you doing in your normal practice that is actually supporting this business? And like you asked me, one of the key discussions, for example, we have some of our investors is, what kind of risks are you insuring? Are they risks that promote bad practice, environmental practice? Are you in mining risk that impact on our environment? That is making some communities get displaced? Are you in the oil? Are you ensuring oil risks that are causing spillage and a lot of danger to aquatic life? So it is so real. And as a CFO, then you have to step back and think to yourself, you see all these numbers, you see where the business is coming from, but you must sit back and say, what's the source of these numbers? Is it sustainable business? What does it mean for the investor or the person who needs to give me capital at the end of the day? So I found that very, very practical, and it gets the CFO out of the realm of just looking at the numbers and just asking for capital. We've got to extend ourselves to think about the cost of this capital. It's just not the interest, it's the cost of sustaining the business. It's the cost of what we are writing. So that's very interesting. Another example that was a very personal example, actually on Saturday, I was going for a checkup at a doctor's. And I got to engage this doctor, and she happened to be the owner of the business, and she tells me she's actually looking for capital partners, and she's engaged some very good partners on the table. And she tells me the biggest sell for her has been they're looking for a technology to help manage medical business. So you see, we are not running away. And they're looking for a technology to be able to help the doctors manage the claims, the medical claims that come through, so that at the click of the button, they're able to send that to the insurance companies and get payment. You see how it flows through. So this is a doctor and owner of a business. She's talking to me about technology, how she just needs some very good system that she lodges. It goes straight to the insurance company. She's able to she's paid. The investor is seated there and saying, what do I have to do with this? You need to show me the value in it. And she has to put a case of how that is going to help ultimately in the industry to be able to bring a service, medical, to the citizens of a country is extremely important. Yet we know it is extremely expensive. Even in our own society, we know how it has raised a lot of interesting discussions. So I think with those two examples, it's to say sustainability is very key, and we must be proud of it, because that is what exactly is going to keep the world going around, I guess. Now we are even going to Mars, so it's going to be very interesting. Once we live the life on Earth, then now we're going up to Mars. But as a CFO, it's beyond the numbers. You must sit back and say, what's the source of this value? Is it a value that is towards the furtherment of the general where the stakeholders are looking at? Stakeholders being investors, our employees, and those kind of things. So very, very interesting, but those are examples that I see every day, and they actually define. When you talk about cost for capital, this cost that is becoming better because you have carbon credits, because you're operating in certain things. So when you sit as a CFO and you're calculating your cost of capital, it's just not the numbers of 10% times something else. It is plus what else. Yeah.
Maybe to add
Yes.
to that, when we talk about the cost of implementing the sustainability requirement, and most of our CPAs here will agree that the resources we have within our organizations are just enough to meet the operational costs and maintain the institutions on day to day. And I'm thinking about CFOs being strategic leaders, initiating collaborations and partnership that are geared towards what we call external financial resource mobilization strategies that will bring in partners. Okay? And as we discussed here, we said there is value addition that the stakeholders are looking for, the value addition that investors are looking for. If CFOs are able to forge partnerships and collaborations that would attract donor funding, that would attract partners into the organization that are willing to fund the sustainability requirement cost, I think that would go a long way in ensuring that we are compliant in ensuring this. And that means that the resource mobilization strategies that universities are, for example, undertaking must go beyond the tuition revenues that we collect. And for example, in the education sector, almost 90 to 95% of our revenue collection comes from school fees. So if you have to go beyond and say we want to implement the sustainability requirements, which is at a cost, then we must be able to forge partnerships, initiatives, and collaborations that will bring in partners to finance the initiative. Thank you.
Thank you very much, CPA Humphrey. I hear him talk about another addition or another key role that CFOs needs to embrace, that of partnership building and resource mobilizing. Having listened to them, I would like them to take an opportunity to project into the future. First of all, look at the current. What skills must current CFOs really have, and what skills do they need to build over time into the future to become relevant to the organizations? And I give this chance to CPA Mohammed to start. CPA Mohammed, you have seen it all, from the days of bookkeeping, record keeping, all the way now to artificial intelligence. And you've heard what CPA Dr. Daktari has talked about, the fact that we need to make sure that we add value to our investors and even to our stakeholders. What going into the future, if the people who are going to occupy CFO position 20 years, 30 years from now, what skills or competences must they have? And how, tied to the same question, is in terms of training, how do we form the next generation of CFOs in our institutions of learning, including where CPA Humphrey works, and I'm sure he's going to give us a great insight. So the floor is yours.
Thanks. So the university will really be a key role in terms of the training of these CFOs, but also practical experience. But before I go into that, there's something that just to add on what he said about sustainability. In addition to investors, to promote sustainability, what role will the government play? For example, to provide incentives, like tax incentives, for sustainability to be implemented. That way, it can, I think even, because getting partners might be a challenge, but how do we use internal resources through government incentives to be able now to drive this sustainability forward? And even within institutions, how can we adapt to revolving budgets other than fixed budgets? Because this is something that is evolving and is changing. So, and I've seen things changing overnight. For example, like now the Trump rules coming in. Whoever did a budget now, they have to go and review it for those people who are exporting. She spoke about the pandemic. What if now another pandemic comes? How did we adapt during that time of pandemics? And we also have to learn now within institutions, how do we make the budgets agile and this role being agile? So based on that, the role moving forward, the skills that the CFO requires is a lot to do with strategy, foresight, agility, adaptability. They need to be able to, and also entrepreneurial skills, they need to be able to combine all that to push the business forward. I don't see it as a back office role anymore, because for a number of the CFOs that have been there, they're still in this shadow of, the way accountants wanaambiwa, they're very serious people. Yeah? They don't laugh, they don't smile. They'll have to be more interactive. Because if you're going to deal with investors, if you're going to deal with the board, if you're going to deal with your team members, and if you're running an institution of 40,000 students, what kind of interactive skills are you going to have? Because it won't be, where you are hidden somewhere in a corner, you've locked the door, you're just punching in numbers. I mean, all that is going to move into technology and into the system. So there'll be those other softer issues in terms of communication, in terms of presentations for the value addition, like if you're going to attract investors, if you're going to look at funding, and that will be a key role that the CFO will be playing for the future business.
Daktari, please weigh in on the matter. And now, having the benefit of practicing as one already now, give your insights, provide us with your insights in terms of what skills or competences are really required that in terms of formation of the new CFOs coming to the stage long after you've left.
Yeah, so first is to completely agree with what CPA Mohamed has said. There are skills that are top on the box there, the strategy that he has mentioned. But just to add, two skills that I wish to focus on. One, you must be a super collaborator. My CEO says, wherever there's a shilling, I must be there. Wherever anybody is talking about a shilling or a dollar, I need to be there. And that is almost in every, if you think about it, it's almost in every room in the organization. And that's not too much to ask for, because at the end of the day, you are the controller. And you need to know how this is adding value or not adding value. You've got to be at the center of that. When marketers are talking about their plans, you've got to be there so that you are asking the right questions about what value am I seeing in this. Yeah? When the people and culture, HR as we call them sometimes, are discussing, you must be there. Not really to cut their budgets because they don't like us in meetings because they think we're going to cut the budget, but it's even about seeing that they are spending for the value, to ask the right questions. Are they helping build the skills that we are seeing? Are they spending in the right places? So collaboration is going to be very critical, because if you need to be in every room that is speaking about a dollar or a shilling, it means you have to collaborate with people. You cannot be a jack of all trades. And we cannot pretend, and nobody should ever pretend that you can be an expert in anything. My greatest win today, I say, is in actually the collaboration that we have. Even in typical functions like credit control that will forever remain finance, but we've actually come to see they are now swinging back to operations. We are telling the guys in operations, you brought this business, you know this client, you have an intimate relationship with them, come on, buddy, you're going to help correct this, So that means collaboration is key, so that you are able to also show your colleagues and other functions what is in it for them. So that traditional roles like that, and that's why I said when you asked whether we are going to get redundant, trust you me, I think today, for example, if my credit team decided to sleep, the money would still get collected by somebody else. You can imagine, yeah? The second skill is, and very connected to collaboration, so collaborate with your peers, get interested in every room people are talking money, be there. You're not the expert, but be there and ask the questions and rely on them, their expertise. The second one is learning. You must be a person that is ready to learn. I attended my doctorate at USIU, and one of the biggest reasons why I wanted to go to school, and I still love being in spaces, is how you learn a lot from varied areas that help your thinking. And as a CFO, you cannot be stuck in this corner in finance and never move out. One, never move out of your functions, but also never move out of your industry. So I think, insurance industry, I have good peers we discuss about, but every so often you listen to a health sector person listen to what Mohammed is talking about, CPA Mohammed is talking about. Listen to an aviation person. I mean, it's amazing. Once I had a discussion with a friend of mine in aviation about their quality assurance and exactly what they do. There's so much to draw from other industries. And that means you've got to continuously keep learning. I was discussing with yourselves outside when we were preparing, and I was telling you that one of the other things is it's an important thing to give you confidence as a CFO, so that when you're making pronouncements and when you're making recommendations, they are well founded. They are well founded, and you're backed up by evidence. You're backed up by places where they've been implemented, because anything under the sun, somebody has tried it somewhere. So it's important to learn from those who've been before us, from experiences, and even from those who it hasn't worked. So learning is something that you cannot run away from, unless you want to sign up that redundancy. Yeah.
Sign up that redundancy, which we are not keen, we are not ready. I would like the CPA Humphrey to provide a perspective, and more deeply, CPA Humphrey, now that you are in the education sector, are you going to form the next CFO who will be relevant, or are you seeing what skills in terms of competencies? Where do you see the next CFOs? Are you going to see them really adaptable, or from the way you are forming them at the university, or you are going to see them changing to other roles?
The emerging law of the CFOs won't be after us. I think number one is CFOs that are going to make impact in organizations, in my opinion, going forward. There's a concept we call intellectual capital. Intellectual capital has to do with the human capital, the customer capital, the relational capital, enterprise capital, that gives the organizations the leverage to use the persons who are in that institution to contribute significantly to the development and progress of that organization. What do I mean by this? A CFO going forward should be asking himself, how do I advise the board? How do I advise management on investing? Because he is looking at the budget and seeing where the budget is and where they are going, to put in more money into human capital that is going to take the institution to the next level. That is number one. Number two, I'm looking at the scale of the next CFO having very high level capacity for data analytics. Using the technology survey that we have now and going forward, because it will keep evolving, how does the CFO use a team around him to get data analytics that will speak into the future? For example, it will show dynamics into what is going to happen next year but one. Given the business environment today, how do you use data analytics in the organization today to forecast what is going to happen tomorrow, next year but one? That will enable the CFO be part of a team that is building a resilient team, a resilient organization that will adapt to changes that are going to come into the future. In my opinion, we should have a succession management in the CFO's office. And given the dynamism that is going to happen, I think we have no option but to initiate mechanisms that are going to have succession planning for the people who come after us in our offices.